So 1 month ago now, I put in £113,000 all into the S&P 500 in one go. And of course, we all know what happened after that. We had one of the biggest dips in the S&P 500 for a very long time. However, as they say with investing, it really is about the long term and not the short term, because already we're seeing that the doom and gloomers might have already made another error saying that everything is going to crash, because there is some hope as always in the stock market. As you can see, this is my stocks ISA portfolio on Trading 212. Over the past month, as you can see, we've had a very rocky ride due to the S&P 500. My rate of return has been a negative 2.7% or a loss of £3,115. It's crazy to think at the beginning of the month, my portfolio was worth over £116,000. And at one point, it went down all the way to £107,000. That is a huge difference in my portfolio value, around £9,000. And yes, to new investors, this is all very difficult to stomach. But you know, as someone who has been invested for a while now, this is just part and parcel of the stock market ride. So like I said, a month ago, I bought £113,000 worth of shares in the S&P 500 all in one go. And this is what it's worth now. As you can see, today we're doing a little bit better than before, up by 0.2%. Of course, the markets are open, so things can change. But anyway, my investment, I have 11,180 shares in this fund here, the iShares Core S&P 500, and that is down by 4.25%, which doesn't sound like a lot, but in terms of pounds and pence, that is a loss of £4,808.25. That's not it, because in my Trading 212 Invest account, I bought another £21,000 plus worth of S&P 500 shares as they were falling in value, and I'll show you that in a bit. If you would like to sign up to Trading 212 and receive a free fractional share worth up to £100, all you have to do is to use the link in the description box down below. Alternatively, if you've already signed up to Trading 212 in the past 10 days but haven't received a free share, all you have to do is to click the 3 horizontal line menu over here. Scroll all the way down until you see the section use promo code, and in this section just use my code JUBAIR and you should receive a free fractional share. So let's go over to the Trading 212 Invest account. Now, as you can see, over the past month, my Invest account has been doing a bit better, down by only 1%, and that is a loss of £254. Now, here's the investment I'm talking about. So as you can see here, on the 3rd of March, I bought into the S&P 500 at a price of £9.97, thinking it was a bargain, but of course, things went even worse, and on the 13th of March, we really did see just how far, you know, a small dip can go. But anyway, I have 2,160 shares, so a few weeks later, I am down by 2.7, oh, that changed, didn't it? Down by 2.56%, and that is a loss of £550. As you can see, today has been a pretty good day, and I just wanted to talk about the state of the S&P 500. So one of the main reasons as to why we saw a huge dip in the S&P 500 is, of course, a lot to do with America, and of course, America being S&P 500, but not just that, because the president of the United States of America is really adamant of imposing tariffs basically across the whole world, where really important businesses trade with each other, and you know, it's a symbiotic relationship, a mutual relationship. Where the US trades with other companies, they get, you know, manufacturing labor cheaper in other countries, and those other countries benefit, although probably the United States benefits a whole lot more in that situation. But anyway, if tariffs are to be imposed, and very heavy tariffs at that, it will cause the prices of all things, for example, Nvidia chips, to go up, and that's going to affect the consumer. And as an investor, why would you want more tariffs? Because that means that's going to eat up in your profits no matter which way you want to look at it. Now, it is way too early to say if there is going to be no crash at all, because realistically, a crash can happen at any time in the stock market. And even though we hear warning signs all the time, you know, when a crash is about to happen, most people actually get caught in the winds and have no idea it was about to happen. What I really want to highlight in this video is that, of course, there are a lot of people who said the S&P 500 was going to crash. We actually did see a dip of over 10%. And realistically, the word crash doesn't come with a number. Technically, 5% could be considered a crash. It's quite significant. 10% in some cases could be considered a crash. But most people would probably agree 20% or more is a crash. But 10%, in my opinion, is a huge amount amount to be down by, especially during all-time highs, and it really does make investors nervous if there's going to be another huge crash. But anyway, like I said, I bought into the S&P 500 just when I saw a small dip, and I actually don't regret it. Although, sometimes I sit there at night and wonder what would have happened if I held on to my cash a bit longer and bought it here for around £9.38. I would have been really happy then. But then again, hindsight is 2020, and would I have actually risked keeping my money as cash as the markets were dropping? Because alternatively, what could happen is there would be no crash and the value of the stock market just goes up and up, and you are priced out of that. If you want back in, you're going to have to pay a higher price, which made no sense of keeping cash because you literally just wasted time and money. And that's exactly, as investors, what we have to consider. Sometimes it might be beneficial as a strategy to keep cash, but you know what? If you sit on cash forever, you're always going to wait for the dip, and the dip never comes. And ultimately, cash has always lost compared to the stock market over any significant period of time. That being said, currently on Trading 212, there is 4.6% as an annual equivalent rate on uninvested cash. Of course, the catch here is that most of it is put into qualifying money market funds, and the breakdown is in more detail now on Trading 212, for example, Northern Trust, Goldman's, and the list goes on. Currently, I am down by thousands, but I can't regret my decision of going all in, because if I had waited, there is no guarantee what would happen to my cash. So make sure to check out some of my other videos, and I'll see you in the next video.